Thank you, Rod. Thanks so much to Transcend for having me today. My name's Nikki Barr. I'm from Flawless Figures Bookkeeping, and we aim to alleviate the stress for small to medium-sized business owners so that they can focus on what it is that they do best. I thought I might start with just a little bit about me. So it took me a little while to work out what I wanted to be when I grew up. I started a couple of businesses along the way in different industries, and I learnt from experience how stressful running your own business could be, wearing too many hats, trying to be everything to everyone, a mother, a wife, a businesswoman, the sales manager, the marketing guru, and the administration assistant, and also the bookkeeper. I imagine that many of you are experiencing that now, like most other small business owners. So I've been bookkeeping for 25 years and running Flawless Figures for the past 8. I'm a registered BAS agent, registered with the Tax Practitioners Board, and a member of the Institute of Certified Bookkeepers. I started as a sole trader about 8 years ago in this business, and now I have an amazing team of 8, which include a mixture of admin staff, bookkeepers, and BAS agents. So this morning, as Rod said, if you've got any questions, just pop it in the chat. I'm happy to answer questions as we go. But just keep in mind that I'm not an accountant, so some questions I might have to refer you back to your accountant or your financial advisor to ask them for. Most importantly, it's a relaxed space, whether you're super organised or feeling a bit behind the 8 ball as we approach tax time. I'm sure there'll be something here for you to take away. All right, so let's make end of financial year a little less scary, shall we? Next slide, please, Rod. Just a little bit of housekeeping before we go. The information shared in this webinar is general in nature and is provided for educational purposes only. It does not take into account your individual circumstances and should not be considered tax, financial, or legal advice. We recommend seeking advice from a qualified accountant or tax professional before making any financial decisions. Flawless Figures Bookkeeping accepts no responsibility for any actions taken based on the content of the presentation. Okay, Rod, next slide, please. Okay, well, let's start off with a fun myth buster. Common misconception: if I ignore end of financial year long enough, it'll go away. Trust me, I've tried this and it doesn't go away. So next slide, thanks, Rod. It's just some of the things that we're going to cover today. So just some upcoming important compliance dates. Some of them may apply to some of you, and some may not apply to you depending on your current setup of your business. There's a few things changing from the 1st of July that we need to keep in mind. So I'll go through those. Common end of financial year mistakes, some common forgotten tax deductions, some record keeping best practices. We'll go through some software and automation as well. Again, depending on where you're at in your business, you might already have some software set up, but there might be some tips and tricks on how to really automate that and get it working the best for you. Or you might be at the stage where you're kind of really thinking about where to start. You're not even sure where to start or where to go to. So we'll cover some of those things as well. Reports, at the very least, what reports should you be reviewing yourselves at the end of the financial year? And we'll go through sort of a bit of a finance team for you. Okay, next slide, please, Rob. Okay, I'm going to kick off with some upcoming ATO compliance dates after the 30th of June. So again, really depending on where you're at with your business, some of these may or may not apply to you. First off the bat, we have the 14th of July, we've got single touch payroll finalisation. So for those of you who are paying employees, you have until the 14th of July to finalise your single touch payroll or STP. This is the old payment summaries, or some of you will remember them being called group certificates. The deadline for finalising those is the 14th of July. So after that, or even before that, your employees will probably be reaching out to you. They'll be keen to get their tax returns done, and they won't be able to do that until you've finalised your single touch payroll for them. 21st of July is payroll tax. This is probably not going to apply to many of you here. Payroll tax thresholds around $900,000, so it's for much bigger businesses paying a lot of employees, and that gets reported to the State Revenue Office. So that date is the 21st of July. On the 28th of July, you've got your April to June superannuation. So if you're paying employees, you need to pay their super into their funds by that date. 28th of July, we've got the June BAS. So for those of you who are registered for GST and are lodging your own BAS, the due date for you is the 28th of July. If you have a bookkeeper or accountant that's lodging for you, they're likely to have around the 25th of August to get that lodged for you, and that will be your date of payment as well. On the 28th of August, we've got the TPAR, which is your taxable payment annual report. Now, this is typically for trade businesses who pay subcontractors. It also applies to cleaning, security, anyone in the IT industry, also couriers. They often have to pay a lot of subcontractors. So the ATO uses the TPAR data to cross-check that the contractors are reporting all their income and paying the right tax. So with the TPAR, we're reporting details such as contractor's ABN, contractor's name, address, total amount paid, and the total GST paid. It's just another way of the ATO keeping an eye on what everybody is doing and making sure everyone's lodging the right amount of income and what have you. If you fall outside of those industries, you don't need to worry about TPAR. So it's mainly people in the construction industry, trades, electricians, plumbers, those sorts of things. So making sure that you're holding on to keeping invoices from those subcontractors that you're paying is crucial because we do need to report the ABNs and everything. So if any of you do fall into that category, that's an important one to keep in mind. Next slide, please. There's a few things changing from the 1st of July. So the superannuation guarantee has been gradually increasing from 9% in 2013 up to 12%. So 12% was always the target, and it's finally hit the 12% mark as of the 1st of July. And that's where it's set to stay for now, hopefully. So for those of you who are paying wages, ensure that your software has been updated for the superannuation contribution to 12%. Most of the software that you're using, if you're using Myop or Xero, QuickBooks, it should automatically happen, but just double check when you go to pay your superannuation that it has, for your staff, that it has increased to the 12% as of 1st of July. Instant asset write-off. This is really entering into accountant territory, but it's just an important thing to note that it's reducing from $20,000 to 30th of June to $1,000 from the 1st of July. So if you're buying an asset before 30th of June, it has to be, you have to have purchased it, received it, and it has to be installed and in use by the 30th of June to be able to claim that instant asset write-off in your taxes for 30th of June. So from the 1st of July, that is reduced. So any asset that you buy from the 1st of July onwards, the instant asset write-off is $1,000. And then anything over and above that, essentially, that's just going to get depreciated over the years. So it will still get written off, just not in that financial year. Minimum wage is set to increase. So again, for those of you who are thinking about taking on employees or are employing, Fair Work will update the pay rates on the 1st of July. So it's those on the minimum wages that you need to consider. If you've got someone on the base award, just review those at the 1st of July and just double check to make sure that you are paying your employees at the right rate. Interest on ATO late pay longer tax deductible. This is an interesting one. So it's part of a broader push to encourage timely tax payments and reduce the benefit of using the ATO like an interest-bearing credit facility. So previously, when a business or individual paid interest on late tax debts, like income tax, GST, PAYG, that interest was considered tax deductible expense. This made it less painful financially being late on your payments. But now from the 1st of July, general interest charge and shortfall interest charge will no longer be tax deductible. So late payment on interest and tax debts, you will no longer be able to deduct the interest component. What's not affected is the interest on business loans or overdrafts or interest on asset finance. So if you're borrowing money, say from the bank to pay your ATO loan, then that interest is deductible. I'm not suggesting to any of you that you go and get a loan to pay off tax debt, but just worth noting that if that was the scenario, that you would actually be able to claim the interest on those loans. Okay, next slide, please. Okay, some common end of financial year mistakes. So one of the first things I will always talk to a client about is just making sure you're keeping your personal and your business expenses separate. So the importance of separating your business, having a separate business account to a separate personal account. This is one of the first things that you should do, particularly if you're just starting out in business and you haven't done this yet, and you're still kind of paying for business expenses through your personal bank account. Just make sure, that would be the first thing that I'd do if you take nothing else from this webinar. Make sure you go and get yourself a separate business account. It's going to make your life a lot easier when it comes to, providing a bank account to your accountant, or if you are using a Xero or mild file, being able to reconcile those as you go and keep them separate. And same if you're paying a bookkeeper currently, again, you're really just paying for them to do extra work to separate out your business and personal expenses. So that would be the first thing that I would like to mention. And if you haven't done that yet, please go and get yourself a business bank account rather than just putting everything in your personal. If you have purchased business equipment or business expenses using your personal card, doesn't mean you can't claim it. You can absolutely still claim those, but just for keeping things clean, highly recommend that you get those two separate accounts. Missing or messy receipts. This one is for you if you have a glove box full of receipts that you empty out when you go to your accountant. There's some great digital storage solutions like HubDocs, Dext, those sorts of things. I'll talk about those a little bit more in down the track, but make sure you're keeping those receipts. Some people think that, if it's under a certain amount, you don't really need to keep it. That's not true. In the event you did get audited, the ATO want to see all of your receipts, and we have seen examples where people have got audited, and even for small amounts, if they haven't got the receipt to back it up, the ATO won't allow you to claim it. So make sure, no matter how small, you are keeping those receipts. And again, I'll talk about some easy options for automating that and keeping those digitally in a little while. Ignoring superannuation deadlines. So again, for those of you who are paying staff, making sure that you get that super paid on time. There's some huge fees and penalties for paying superannuation late. So making sure you get those paid on time. The important thing to note with superannuation as well, if you want it to be deductible in this financial year, you need to actually pay your superannuation by around the 14th of June, because it's actually not going to be deductible if it's not received in your employee's super fund by the 30th of June. So if you're paying your employee's super on the 30th of June, thinking that because it's been paid in this financial year, you can deduct it in this financial year, that is not the case. Although it's not due until the 28th of July, if you're wanting it to reduce your tax in this financial year, you really need to be paying it by mid-June, depending on how you're paying it. If you're paying it through a super clearinghouse, or through the automated super options in Xero and Mild, they've all got varying dates, but the ATO have suggested to pay it by the 14th of June, just to be sure that it's received in your employee's super funds to be tax deductible in this financial year. DIYing when it's gone too far. So if you've been winging it all year with spreadsheets and guesswork, now's the time to ask for help before it becomes an audit. We see it all the time. Business owners start out with the best intentions of doing their own bookkeeping, and they quickly get overwhelmed by it and they bury their head in the sand. An example, we were recently contacted by a tradie who hadn't lodged his BAS or tax return in 5 years. He had the software and was invoicing from the software, but managing his bookkeeping just became too hard. The ATO took him to court and they fined him $10,000. They let him off quite lightly and they've given him 60 days to rectify it. But now he's got his tax and GST that he still has to pay. He's got all the late fines and fees that have come with that, and now he's got a $10,000 fine on top of that. They've given him 60 days to rectify it, but then if he doesn't rectify it in that time, there will be more penalties and fees for him. There's plenty of other DIY horror stories. We took on a client this time last year because her accountant told her her payroll wasn't balancing and she didn't know what that meant. She'd been running her payroll. She had 20-something employees, so it was no small payroll. And just the reconciliations that she was doing weren't quite right. So her payroll had actually, she'd been essentially duplicating the payroll each week. She'd only been paying the staff a certain amount, but each week she was duplicating it in her software. So her profit and loss was looking way out. So it was actually quite a big cleanup job to clean that up. So, and that costs money for clients to do that, actually a lot easier just to get it right or pay someone to do it in the first instance rather than doing a cleanup job, because it ends up costing them more because it's harder to find and track and fix than it is just doing it right the first time. We also had another client who came to us who all her transactions were duplicating and she hadn't realised it. Eventually, it came time to do her tax return and she was talking to her accountant and he said, well, you've earned this much. And she said, I know 100% I have not had that much income. It's way more than what, on paper, it was way more than what she'd actually earned. So they had suggested that she have a chat to us. And when we had a look at her file, all of her bank feeds were duplicating. So that meant that all of her income had been recorded twice and she didn't pick it up. She was reconciling through her accounts, which is great, but when you're just reconciling every day or once a week, you're kind of not realising that things have been duplicated twice, unless you're actually comparing it to your bank statement, which if you've got a bookkeeper, they will do that for you on a quarterly basis. And it's those times that, those things can be picked up. Usually it doesn't happen. It's rare, but depending on who the bank is and also what software you might be using, it can happen. And unless it's being checked, it's hard to pick up. So thankfully she knew that, the amount off the top of her head wasn't right. So she knew to check it, but it's actually frightening to think that people are lodging taxes based on really wrong information. So doing it yourself is absolutely not a problem. Doing it yourself, the software that's available these days makes it easy to do that. But even if you're doing that, maybe just checking or getting someone who knows what they're doing to check over it once a quarter or every 6 months and say, hey, can you just have a look at this? Just check that we're on the right track and that we're doing things properly. Leaving it to the last minute. So if you're not on top of your financials, you're flying blind. So you can't clearly see how your business is really tracking. Are you actually making a profit or are you just staying busy? So leaving everything to the last minute means you're making decisions based on outdated numbers, and that makes it hard to take action that'll have a real impact right now. Directors' loans and owners' drawings. So this is when you take money out of your business for personal spending. it's easy to get caught out at the end of the year. At some point, you're going to have to pay tax on that. So maybe try paying yourself a certain amount each week without dipping back into the business. Sometimes it's hard to realize because you might be just spending on your business card. You might be, out of money at some point in your personal account and think, oh, I'll just pop it on the business card. If you've got a bookkeeper, when it comes through, they're probably allocating it as personal spending. Some people think, oh, well, I put it through my business, so it must be a business expense. Or your accountant might look at it at the end of the year and go, well, that's not business, and pop it through as personal. And you may not have realised it, but you will be needing to pay tax on that at the end of the financial year, which often catches people off guard. They weren't expecting it. They might be paying themselves a wage and paying PAYG as they go. But yeah, that's just being mindful of that. Like I said, maybe try paying yourself a certain amount of money each week. That's a little bit easier to budget on, and then you kind of know how you're going within your business as well. Being aware of upcoming tax bills. So again, if you're not up to date with your bookkeeping, it's very hard to know what your tax bills are going to be. So, so again, keeping on top of your bookkeeping. But one thing that I've seen lately for new businesses in particular, when you first start your business, you don't pay income tax on that until after the first year of your business. So you'll go to the accountant, you'll do your tax return. The accountant will say to you, okay, well, you need to pay $10,000 on the income that you earned last year. Fantastic. You can go on a payment plan if you need, because you haven't been putting your money or tax aside for that. So then you kind of get into what we refer to as a tax hole, because is what happens then once you've lodged that tax return, the ATO will say to you, okay, well, we know that this is how much you earned last financial year, so we're going to predict that you're going to earn at least that amount this financial year. So now we want you to start paying quarterly installments in advance. So not only now are you paying last year's tax return off because you didn't put any money aside from tax, you're now paying quarterly in advance moving forward. And it very quickly can spiral out of control. So really important not to think, okay, well, I'll just always pay after the financial year, and I'll just always go on a payment plan and what have you. It just doesn't work like that. And it's very easy to get yourself in quite a pickle when that happens. So really being aware of those upcoming tax bills is important. So just to finish on that slide, just end of financial years mistakes are not the end of the world, but they do make things harder. So a little planning now can save you a whole lot of stress and money later. Okay, right, we might jump on to the next slide if that's all right.
Before we go,
Yes.
At the start you indicated separating personal and business expenses with two accounts or two separate accounts, and we would totally agree with that. The latter point where people are not putting money aside potentially for GST payments or other tax payments, we would recommend a second business account. And that second business account, every invoice should have money or an amount of money going into that second account, so that you're not spending money that is going to be owed to somebody and you're going to need to pay it. It will be in that bank account ready to go. So that is something that we would recommend based on what Nikki's talked about.
Absolutely. Yeah, thanks for bringing that up. It's a really valid point. I would also always recommend at least two business accounts. And you can have more. Sometimes it just gets confusing the more there are. But particularly if you're paying payroll, you want to be putting away PAYG and superannuation, so that when those bills come available, you've got money sitting there to pay those as well, whether you put that into a separate account or just into your kind of tax account. That's a really, really good point. Thanks, Rod. Are there any other questions on that slide before we move on? Just on that point too, sorry, whilst I'm on the super tangent, the ATO are trying to bring in what's called payday super, which means at the moment super's not due till the end of the quarter. So when you pay your staff wages, withholding the super is a great idea, popping it into a separate account. And then at the end of the quarter, you can pay that super to either the ATO clearinghouse or another clearinghouse. But we usually recommend that to our clients that you do monthly at the very least, because otherwise you're going to have a huge bill at the end of the quarter. But more often than not now, we're recommending that we do it weekly, and a lot of the software allows us to do that quite easily. So that when you're paying wages, you can just do super with that, and then you're not having to think about, okay, I've got that aside for when that bill comes in. And the ATO are trying to enforce that. It's not been enforced yet. It's going to be because of the challenges associated with it. Obviously, business owners have to be well on top of their bookkeeping and their record keeping and things to be able to do that. And the software now, like I know Xero have just implemented, it used to be you had to be on a higher package to be able to have auto super function readily available, but now all these software are bringing it in to make it much easier to be able to do that. But if you haven't got those options available to you, very important to have a separate bank account to be putting that money aside for when it is due. Okay. Next slide. So expense considerations and forgotten deductions. So there's a few here. So a few that get forgotten. So for those of you who are tradies who are working outside, sun protection and protection items, PPE, even prescription sunglasses are deductible. So those bills and expenses can go through. Mobile phones and accessories, sometimes we forget those. We've been using the same mobile phone for forever, and it's on our business bank account and our personal bank account, and we don't even consider putting it through our business. So, and all the charges, if charges are anything in your house like they are mine, we go through a lot of charges with the 4 kids. So they're definitely a tax deduction. Subscriptions. So again, there might be some subscriptions that you've had for quite a while before you operated a business. Just make sure you're popping those through your business account too. Be mindful that if you watch Netflix once to watch a business documentary, in reality, that's not a business expense. So just be mindful that you're not putting all of your subscription through your business account. But there are, if you're downloading apps that cost money on your phone, they are absolutely business expenses. Home office expenses, if you're working from home and you've got a dedicated office space, you can claim some of those home expenses and home office expenses. Again, it will vary depending on your situation, whether or not you can claim any rent. Are you renting? Do you have a mortgage? Those sorts of things. So again, I would encourage you to reach out to your accountant to have a chat about your own personal circumstances. But generally speaking, to claim any home office expenses, if you've got a little desk in the corner of the lounge room, not so much. But if you've got a dedicated space for your office, you can claim home office expenses, or a portion of your home expenses as home office expenses. Motor vehicle expenses, again, stepping on accountant territory, but generally they will recommend that you keep a logbook for 12 weeks and give that to them. There's some great apps and things that you can download and use so that you can sort of determine your work usage versus your personal usage. So that's definitely a great idea and worth having a chat to your accountant about. Professional development and training. So if you're trying to upskill yourself to improve your business, they're absolutely a tax deductible expense. Bad debts. So if you've been invoicing and you've got some bad debts there that you're unlikely to be able to recoup, make sure you're looking at those before 30th of June and writing those off. So you have to have made reasonable efforts to collect the bad debt. But if you're unlikely to get that, definitely writing that off before 30th of June will help reduce that taxable income. Depreciation and instant asset write-offs. I touched on that before with what's changing from the 1st of July. So $20,000, again, the asset has to be installed and in use by 30th of June, and it's per asset, mind you. So, and that will reduce to $1,000 from the 1st of July. I'm not suggesting that everybody runs out and buys equipment or a car before 30th of June. Definitely have a chat to your accountant or your financial advisor to see whether or not that is applicable, you know, if it's a good move for you. Additional superannuation contributions, and again, I'm conscious of not speaking outside of my lane and leaving the accountants to do their accounting, but additional super contributions is a great way to reduce your income tax at the end of the financial year. So this is something you can do in preparation for 30th of June. Reach out to your accountant and find out if you should be putting some extra super contributions away to reduce your taxable income. I believe that the super contributions are taxed at 15%. So depending on how much money, what your income is and what kind of tax bracket you're in, that could be a substantial saving for some of you. You also want to be aware of the caps that for the contributions so that you're not overstepping those. So definitely reach out to your accountant, but that is definitely a great way to save on some tax. So again, if there's a handful of things that you take away from today, please reach out to your accountant and discuss the superannuation contributions, because it really needs to be paid. If you pay it on the 30th of June and it's not received in your fund by the 30th of June, then it was kind of a wasted effort. So you need to be on the front foot with that. Okay, next slide, please, Rod. Record keeping best practices. So we've spoken about the importance of separating business and personal finances and ensuring that you've got another business account for taxes and things put aside ready for tax time. Using cloud accounting software. If you're still using Excel, there's a better way that won't give you a headache. Tools like Xero, QuickBooks or MyOb help track income, expenses and GST in real time, and they make end of financial year much easier. And I'll go through some of those options with you shortly as well. Tracking all income and expenses accurately. So if you're guessing your numbers, so will the ATO, and they won't guess nicely. So recording everything, even the small stuff, it all adds up and affects profit, tax and deductions. So making sure you've got some consistency there with how you're tracking all your income and expenses. Keeping digital copies of your receipts and invoices. So I'll touch on some options with the likes of HubDoc and Dex. They're just a couple of receipt capture apps that you can use, but keeping those will be great, because when your accountant has questions or your bookkeeper has questions at the end of the quarter or the financial year, or in the event that you do get audited later on down the track, you've got those copies of your receipts and invoices, and it's so much easier than having to file them like the good old days where you file all your receipts. There's really no need to do that now. And if you are keeping a hard copy of your receipts, printing things out and filing them, they printed receipts as well. If you're getting things from the petrol station and what have you, they fade over time. So keeping a digital copy is much safer option. If you're keeping them on your computer, just making sure you've got backups of your computer. But if you're using like a receipt capture app, then that'll be enough to retain them. My husband is a concreter and he is terrible at keeping receipts, and I've got him using these receipt capture apps, and even he can do it. So that's a good sign that if he can do it, you guys can do it too. So reconciling regularly, not just at end of financial year. Again, we spoke about this before. There's multiple reasons why you should be doing it regularly. One is because it makes it easier at tax time. That's important, but the main reason is you can't make great business decisions if you don't know your numbers, and if you're not reconciling regularly, then you can't know where your business is at. So Staying on top of payroll records. So if you are paying employees, are you tracking their leave entitlements? Are you keeping an eye on their super and PAYG that you're going to need to pay? Are you checking minimum wages to make sure that they've gone up? Those sorts of things are important to stay on top of. Understanding retention requirements. So how long do you have to keep a receipt? The rule is that it's 5 years after the date that you've lodged your tax return. So if you've just lodged your tax return in May for the 2024 financial year, then you need to keep those receipts from 5 years from May, not from the date of the purchase. So, you know, I always just tell, and some records, payroll records are longer than that. So I just generally tell clients to make sure you're keeping them for 7 years. Use categories and consistent naming. Again, that sort of goes with tracking all income and expenses accurately, just making sure that you've got consistent naming and using categories. Don't lump everything as in general expenses. For our clients, we don't even use general expenses at all because it's very, you know, it could be anything in there. It's just way too broad and general. So just breaking down your categories a little bit more into what that is. Is it an office expense? Is it is it a staff amenities? Just breaking down a little bit more. You don't need to go crazy with your chart of accounts, but having some differentiation between what those expenses are is useful for your accountant at the end of the financial year. But again, it's also useful for you when you're reviewing your reports and figures at the end of the financial year to work out how you can increase your profit, I suppose. Automate where you can. So this is one of my favorite topics. We love automating systems. There's so many options with the apps and software that's available to us now. So where you can, and I'll talk about some of those now, actually, if you want to jump into the next slide, Rod, that's probably a nice transition into that. The importance of automating, the great thing about bookkeeping is that it is quite repetitive by nature. So that makes it quite easy to automate. It reduces human error. It saves hours of admin time and it keeps your books tidy all year round. So much easier to kind of keep on top of those compliance obligations with the ATO. So some of the things that you can automate, connecting your bank feeds. We often have clients come to us who have done the right thing, gone and set up a MYOB or a Xero file, but they haven't actually connected the bank feeds. So if you haven't done that yet, making sure you're connecting the bank feeds. For those of you who are not familiar with that, that's essentially just connecting your bank to the software so that you can then easily reconcile from there. Setting up bank rules is fantastic. Great way to automate, and then it just populates. So essentially you're setting it up that if any expense comes through for Telstra, then immediately that's just automatically reconciled to your telecommunications or your telephone expense. So setting up those bank rules is a great automation option. Automated receipt capture, recurring invoices and bills. So if you've got regular invoices going out, then set them up as recurring. There's no need to manually input them every time, especially if they're the same amount. You might have a monthly bill going out, set them up as recurring. Same as your bills. If you've got a regular bill that coming in, you can set them up as recurring. Even if, say for instance, if you were a cleaning company and you might bill your clients every month, but there might be variables in it, how many weeks fell in that month, or you might need to add products once a month or what have you. You can set up an automated invoice that comes through as a draft invoice. And then you're just going in and simply adding those variables that might have come through that month. So the invoice is already created there in the background, and then you just go in and create them and send them. So some people might say, yeah, but the invoice changes every month. There still might be a partial part of that you can actually automate without automating the whole part of it. There might be some aspects of it that you can automate. So just thinking a little bit outside of the square and not just dismissing, well, I can't do that because I do it this way. There might be a way around it. Auto reminders for invoices for those of you who are struggling with debt collection. These are fantastic. They are set up in your software. So if somebody hasn't paid by, say, the due date, quite often some of our clients will set up auto reminders to actually go the day before the bill's due, saying, hey, just a friendly reminder, your invoice is due tomorrow. And then they'll get another one 7 days after saying, hey, you've missed your bill. And then you can have different templates set up for different timings. So by the time it gets to 14 days overdue, the invoice template, email template might not be as friendly. And then by day 28, it might be an angrier email again. So you can turn that off for certain clients. If you know that there's this client who just always will pay 30 days and 1 day late, you might be okay with that, and you can turn off the invoice reminders for them. So just because you're setting up automation doesn't mean that it's like that across the board for everybody. There's certain changes that you can make so that it's not affecting everybody at all at once. So setting it up correctly and checking systems regularly. The thing with automating systems is it does need to be checked. Don't just set and forget, go back in. It doesn't have to be all the time, but you do just need to go in and check that is working okay. So yeah, just keeping an eye on that could probably give a million examples, but yeah, just checking that those, and things change all the time as well with the software and the apps and AI. Things are changing all the time and improving all the time. There's new automations all the time. So what you set up 2 years ago is probably something even better that you can be doing now. So just checking in on those. Okay, next slide, please, Rod.
I will make a comment here that I think is important. You don't need to automate at the front or the start of a business, but as your business grows and your time potentially spent on bookkeeping increases, you might, if you've attended our workshop, we talk about high value task and low value task. Counting the numbers, while it is important, is not as important as getting out there and generating revenue. So there will be a time where you need to automate some of these or get somebody else to do it for you. And it's important to recognize that. And once the automation is set up, it takes a lot of the hack work or time-consuming work out of bookkeeping and reconciliation.
Absolutely. So most of you will be familiar with one or two or maybe all four of these. These are for those of you who are starting out and wondering where to start, or maybe growing and ready for that next level and just maybe need some help with making the right choice. So the old Excel spreadsheet, someone who isn't registered for GST, who's just starting out, may keep records of their income and expenses in an Excel spreadsheet, and there's absolutely nothing wrong with doing this. You can send it off to your accountant at the end of the financial year. But once your business starts growing and getting busier, I wouldn't recommend it for ongoing. And I'm talking really small startups with very few transactions. Once you find that that's getting a bit time consuming, it's probably time to consider upgrading. You can reach out to your accountant. They've probably got a template that you can use, so that you don't have to reinvent the wheel. You could just ask them for a spreadsheet template that you can use, input your data, send it off to them at the end of the financial year. There's certainly nothing wrong with doing that. MYOB, most of you will have heard of MYOB. I used MYOB for about 20 years. I loved it, didn't want to change. I reluctantly changed my personal accounts over to Xero because it was becoming more common. And I thought, well, I better try it out. And now I would not go back to MYOB in a million years. Pricing of Account Right is quite expensive, but they do now offer a MYOB Essentials that's cheaper, but it's a little painful to use. QuickBooks, some of you will have heard of QuickBooks. It's cheaper than MYOB Essentials, but I'm personally not a big fan. It's a little bit, you pay for what you get with QuickBooks. But there are a few bookkeepers who don't mind using it, but many of them won't touch it now. Same with accountants. They won't even take clients on who use QuickBooks. And we personally won't. If there's a client who's coming to us and interested in changing from QuickBooks to Xero, we would definitely help them transition out of QuickBooks, tidy that up, finish it up for them. But you'll find, honestly, it's not as easy to automate, and it's harder to find things that go wrong in QuickBooks. So you'll end up finding what you might save in QuickBooks fees, you'll end up paying in bookkeeper and accounting fees. So sometimes going with the cheaper option isn't always the best. Xero, honestly, I'm a huge fan, so much so that we're a Xero only practice now. And as far as I'm concerned, it's so much more of a superior software. It's a lot more user-friendly. The app marketplace is incredible. So meaning there's plenty of add-on industry-specific software that integrates beautifully with Xero. They're constantly improving Xero. You don't have to update your software every time they make a change, which is a plus. The apps don't drop out like we've experienced with other software. So earlier I talked about bank feeds duplicating or dropping out, and it not being picked up when you're doing DIY bookkeeping. It happens less with Xero. It can happen depending on the bank that you've connected your bank feeds to, but less likely to happen with Xero. It's very user-friendly for our clients, so our clients still get in there. They're able to easily send invoices and quotes, and they can even do some of the reconciliations, do their payroll and what have you as well. So it's a lot more user-friendly on that level, and a greater ability to automate processes with Xero. So as a price point, it's more expensive than QuickBooks and MYOB Essentials. It's still cheaper than MYOB AccountWrite. The downside with Xero is that now they know they've got an amazing product and they've got a huge part of the market. Their prices are going up fairly rapidly. So they've gone up quite a bit in the last 2 years, but as a standard subscription, it's about $70 a month. $70 a month, and that gives you a couple of employees that you can pay through that as well. So I don't know where that will go with prices, but it's still, in my opinion, again, the automation and what have you is, time is money, I suppose. So if you're not having to spend as much time doing your bookkeeping, then it's probably a subscription that's well worth paying. Next slide, please. App marketplace, this is one of my favourite subjects. This Xero, QuickBooks, MYOB, they are good overall products. So they'll manage your bookkeeping just fine on their own. So you can do payroll in them, you can manage your ATO obligations, you can do your invoicing, expense management, but sometimes you need just a little bit more than your accounting software. So getting an app that works well with your accounting software is a great way to do this. So some of them are free and some of them have extra cost. And just to give you a couple of examples, a tradie might need a great job management software. So they might need to have a scheduling app to schedule their jobs, and they might want to track who was at the job, how long for. They might want to upload photos to that job in their job management software, so that when, if a client wants to know what's been done there, it's all in a nice little tidy package, and that these can integrate with Xero, so that you might be doing your invoice out of one software, but you're still kind of managing the account side in your other software. They all have different benefits. Some are better for industries with a high volume of jobs. Some are better for working out job costings, and sometimes it comes down to price and what you're prepared to pay for your software and what features they have. There's payroll apps. So for businesses that have a lot of staff, they may need to do a rostering for their staff. So having an app like Deputy that does rostering and also synchronizes with your accounting software to flow through to your payroll is essential. It saves a lot of time. Another example is inventory tracking. So this can be a minefield. So Xero manages inventory tracking okay on its own. So for example, if you started out with 10 items, to sell, you sold 8, you have 2 left. Sure, it tracks that. But I have a client who's a garden supply centre, and their inventory is a huge job. So they're dealing with tons and weight variations all the time. I never thought about the weight variations between wet sand and dry sand before I started working with this client. So they use Unleashed software for that. all of these apps work beautifully together beautifully with Xero. Most should work with MyOb and QuickBooks, but I've found that sometimes they can drop out and cause more problems down the track. There's a few different apps here that I've popped on the screen. So we've got Ignition. This is relevant to an accountant or a bookkeeping industry mostly, or somebody who does sort of fixed fee billing, like web designers or SEO or what have you. It creates proposals, very nice looking proposals, which the client can electronically sign. They agree to the payment terms, put in their bank details, and from there it will do recurring billing for them. If it's synchronized with Xero correctly, it'll also create the invoice in Xero or any of the other software. And then the payment comes through the bank. You match it to the invoice and the invoice is marked as paid. So very easy and straightforward. HubDoc is my favorite one on here. So HubDoc is the expense. It's a data extraction software essentially. So you can upload your receipts by taking a photo on your phone, or you can drag and drop the receipt into the app, or you can simply upload from your computer, or you can forward an email. So if you get an email with your Telstra bill, you can forward it to a unique email in address that you might have that you'll get with HubDoc, and that'll go straight into your HubDoc account. Now, you can also set up auto forwarding rules. So if you're always talking about automation to the next level, every time you get a Telstra bill, you can just have an auto forwarding rule set up in your email, so it automatically goes through to HubDoc. So you're not even touching that invoice; it goes through to HubDoc. And if you just go to the next slide, I think I've got a little demo in there, Rod. Actually, might be a bit hard to see this slide, but. Okay, so in the top right-hand corner here is HubDoc, and it's extracted the data from this receipt that's been uploaded or been emailed through. It's extracted the data. It knows who the supplier is. It knows how much GST is in there. We haven't had to do any of the data entry on that. It's just extracted it all for you. Is all you need to simply do then is select the account code where you want it to go in the chart of accounts. And then you publish that by that big green button there. And then down the bottom here, I've just shown you how that comes through into Xero. So once you've published that, it comes through as a bill, and is all you need to do then is match it. So it just makes that whole process easy. Very, very easy. It may feel clunky initially, especially if you're just starting to use Xero and you're just getting your head around that. Sometimes I'd recommend that you just kind of get your head around one software. But yeah, it's very easy. No data entry required is all you're doing. And you train it as you go. So essentially, once you've started using it more often, it remembers what you used it for last time. So the last time that bill was entered, this is where you allocated it to. So it'll automatically allocate it. So you can set it up to either automatic auto sync. So every time a Bayside Club invoice is uploaded, you can have it auto sync so that it goes straight through to Xero and you're not even pressing any buttons anymore. This is particularly good for tradies who are always going to Bunnings. Every time that they go to Bunnings, they've uploaded the invoice. We haven't even had to touch anything, and it just goes straight through. So there's a number of data receipt capture apps. So HubDoc is one of them. I mentioned this one because it's free with Xero. And MyOb has its own version called Capture, I think. There's Dext. Dext is a little bit better than HubDoc. It does some other really cool features, but Dext is about $30 a month. So if I would say it's probably worth just, if you're using Xero, just use the free HubDoc one. It's much of a muchness. Still does all the same things. Okay, next slide. I should note, just before we go to the next slide, is just that you don't have to have apps. They're really to enhance what you're doing. Using the MyOb and Xero are fine on their own. You don't need the added expense, but as your business grows, there might be some really cool things. It's definitely worth exploring, or having a chat to someone who knows what different apps are. Have a chat to someone about what industry you're in, and are there any good apps that might work really well for you. It's definitely worth exploring the app marketplace and seeing what's available to you. Even have a chat to someone who's in the same industry. If you're in e-commerce industry, the Shopify, if you're using Shopify to sell your products online, that integrates with Xero. Just learning how it integrates, is really important too, to make sure you're doing everything at the back end correctly. Thanks, Rod. At the end of the financial year, which reports are the most crucial to review? I'm not going to go through too much in detail about, how to read a profit and loss and balance sheet. But at the very least, if you're not reviewing any reports at all, reviewing a profit and loss and balance sheet is crucial. And quite often, if you've made some errors throughout the year with your bookkeeping, it'll kind of jump out at you here if you're reviewing your profit and loss. So the example I gave before, where the client came to us and she had been duplicating her payroll, essentially. It was just a misallocation. It was a quick and easy fix. But she picked it up here. She said, there's no way I've paid $120,000 in payroll this year. I don't know why it's coming up. And she could see it from, well, actually her accountant alerted her to it. But the other client who had said, this is my sales. I can see it in my profit and loss, but it doesn't look right. So a lot of the mistakes that you might have made throughout the year, if you're doing it yourself, will jump out at you here just by having a quick glance. So you've got your trading income at your top, your cost of goods sold. So anything that you've spent, any expenses relating directly to your sales. So if you've purchased materials to build a product, they're going to be sitting in your cost of goods sold. And then you've got your operating expenses underneath that. So that's where kind of everything else sort of falls into. And then in this example, they've made a loss of $8,000. So hopefully your number down the bottom isn't going to have brackets around it. But this is one of the most important reports. I actually review mine weekly, and you can do some pretty cool reports in most of the software that's available, the accounting software. You can do month by month comparisons. That's one that I like to review weekly, is doing a month on month profit and loss. So I can see very clearly what expenses are up for the month, if my sales are down for the month, or what, kind of the trends or seasonal trends. You might do it quarterly. There's some great tracking categories that you can use within the apps as well. So you might be able to review a profit and loss based on the different stores you've got. If you've got different stores in different states, you might have a profit and loss comparison from Victoria to South Australia, those sorts of things. So just thinking about what kind of tracking categories might be useful for you. They're all very easy to do in the software. On the next slide there, we've got the balance sheet. That's the other important one to view. So the balance sheet gives you a snapshot of how much you've got in assets, and assets meaning any plant and equipment that you might have, but also any cash at the bank. It'll also tell you how much accounts receivable you've got. So any money that you haven't received yet that you might have invoiced and you're expecting to come in, whilst it's not sitting in your bank yet, it's due to come in. So that'll be sitting there in your balance sheet for you to view. And same with your liabilities. So any expected things like your GST that hopefully you've put into a separate bank account because you've gone to the bank and created new bank accounts now, you will have that. So you can sort of see at a glance if what you've got in that separate bank account that you put aside for tax is enough to cover these liabilities that are in your balance sheet. So at the very least, at a very low level look at this, you should be able to kind of view what's going on in the business without too much trouble. But there will be some questions, and this is why it's good to review them, is because it'll kind of highlight, things will start sticking out and you can go, that just doesn't look right, or I don't understand this, and just reach out to your trusted financial advisor to help you understand what the figures mean. Okay, next slide, please, Rod. Okay, so your finance department. So making sure you've got a trusted advisor is really important. So most of you will have an accountant, I'm sure. If you don't have one, I'm happy to recommend a great accountant. And that is first and foremost. A business coach, we are really lucky to have Transcend. So working with the Transcend team is a fantastic opportunity for us. Working with them, again, you'll need to have numbers to show them to be able to get down to the nitty-gritty and make some positive changes for your business. But reaching out to the team there is a really great advantage that we've got over most other businesses. And a bookkeeper, again, you can do DIY bookkeeping. You don't have to be a bookkeeper or BAS agent to do it, but it's definitely a really good idea. Finding a bookkeeper to work who will work with your accountant is kind of the best scenario. And again, having a team that all works together, so your bookkeeper, your business coach, and your accountant all working together is kind of an ideal scenario, so that they are all on the same page and they've all got your best interests at heart. Next slide, please. So if you are looking for a bookkeeper, there's a few things that you should most definitely look out for. I recommend finding someone who does fixed fee billing. The traditional way of bookkeeping is hourly billing. The trouble with that is you kind of don't know how much time it's going to take. So 1 month you might get a bill for $1,000, the next month you might get a bill for $200, depending on whether they're lodging BAS that month or what might happen, or are they charging you to fix up errors that they've made? Those sorts of things. So it's a bit of anxiety ridden as well, you know, not knowing what bills that's going to be. So fixed fee billing, generally speaking, you'll get a set amount each month, a agreed rate. So they might charge you, say, $300 a month or $100 a month, depending on the size of your business. And you just know whether you're lodging BAS, whether, you know, it's time to do your TPAR, that's what you pay month in and month out. So I definitely recommend fixed fee billing, and understanding what that fixed fee billing includes. So if you are going with a bookkeeper who's giving you fixed fee billing, is there anything out of scope that they might charge for? So do they do fixed fee billing, but then they also charge you to lodge their BAS? Those sorts of questions are really important to ask. Are they a registered BAS agent? So usually they'll have a little logo that they'll be able to share with you, but you can search them on the Tax Practitioners Board website to make sure that they are a registered BAS agent. Bookkeepers, there's no actual qualification to be a bookkeeper as such. Anyone can be a bookkeeper of the office down the road, but you really want to make sure that someone does have qualification of a BAS agent to be able to lodge your BAS and give you actual advice relating to your BAS. So the other thing is with a BAS agent is that as BAS agents, we have to do CPE hours, 90 CPE hours every 3 years. So we have to do continuing education to stay on top of all the changing rules that the ATO bring in all the time. So that is important. Experienced in the areas that you need. So what is it that you need? Do you have staff? If so, are they experienced in running payroll? Are you an e-commerce site? Do they have experience in that? Do you need to track stock? Are they experienced with inventory? Just asking the questions of them to make sure that you're getting from your bookkeeper what you need. Ensure they're tech savvy. So a lot of old school bookkeepers have not, you know, they've not really kept up with the latest and greatest apps and things. So are they going to be streamlining your processes for you? And that takes me back to the fixed fee billing too. So bookkeepers who are using fixed fee billing, it's actually in their best interest to automate and streamline your processes for you. Whereas somebody charging by the hour, it might not be quite worth their while to, you know, fine tune and down the time that's taken to do your bookkeeping. So you want to make sure that your bookkeeper's tech savvy and keeping up to date with the latest and greatest apps and software. Again, helping to streamline and automate systems, which we've just spoken about. But you also want your bookkeeper to have great communication skills. So you really want them to be communicating in layman's terms. And sometimes they can be a great in-betweener for your accountant, a bit of a buffer between you and your accountant as well. I'm sure most of you have met an accountant that loves to talk in accounting terms, and it's you know, baffling. Got no idea what they're talking about. You need Google Translate to understand. So sometimes a great bookkeeper will be that great buffer for you to kind of decipher what the accountant means. So that is definitely important. Next slide, please, Rod. So key takeaways from today. I think we've banged on about this enough, separate bank account details. So hopefully I've drilled that in. If you haven't already, go and get yourself multiple business accounts, two at the very least, and keeping those business and personal expenses separately. Make sure you're saving for tax. So make sure you're putting that aside. Don't just hope for the best at the end of the financial year, because you will land up in a tax hole, which is very hard to claw yourself back out of. And it will happen quickly. First year, you'll be fine. You'll be like, yep, no worries. I'll get that money for tax time. But that second year, once that pay-as-you-go starts and you're paying off the previous year's tax, that's going to cause a problem for you. You'll just be behind the eight ball for a long time. Setting up great systems and automating where possible. Really important that you contact your accountant now. Don't wait another week. Accountants are going to be flat chat between now and 30th of June. So make sure you get in touch with your accountant to discuss some tax planning, whether it is putting that little bit extra away for super, you know, whether they do recommend spending some money on assets. Don't just make the decisions, do it, and then tell your accountant what you've done afterwards, because it may not be the right move for you. So really important to do that very, very quickly. Review your past financial year, identify what worked and what didn't, and set goals and a budget for next year. Again, we've got the amazing team at Transcend to really help with supporting us with those tasks. So have a look at those reports, have a little play. If you are using a software, have a play, see what reports you can pull out. I'm always finding new reports in Xero. I think, oh, I wonder if I'd love to know this information. And I find stuff that I didn't know, and I've been using Xero a long time now. And then finally, just engage in a trusted advisor. You don't need to have, you know, it's not necessary to have all of them, but at least have somebody that you can rely on and call and ask questions to. And we're ahead of the game there again, because we are lucky to be involved with Transcend. Next slide, please. Just as part of everyone attending today, I would love to offer a complimentary consultation, 45 minutes. So if anyone would like to take me up on that, this is my details. There is no obligation, and it can be just to talk about it might be the industry apps. I don't know them all. There's actually thousands of them, but what industry you're in, and, you know, talking through some possibilities of apps. It might be to have a look at what you've done. If you've been doing DIY bookkeeping, I'd be happy to have a look over your file to see how you're going, or if you just want someone to talk to and nut some things out with, I'd be happy to have a chat with you. So yeah, feel free to reach out via email and we can schedule something in, hopefully this side of financial year, because come 1st of July, the ATO are keeping us very busy with all of their due dates. So, but I will be able to squeeze you in after 30 June, but yeah, ideally before would be amazing. So, did anybody have any questions?